Let's talk AI. That seems to be the buzzword. Baba getting involved. That's helping Baidu. China overall getting very involved in AI. Lithium stocks looking for a catalyst. They got it. Micron earnings. We'll dig into those later in the show. 8:35. Sahak Manuelian, managing director over at Wedbush Securities, will join us to survey the markets. It's Wednesday on PreMarket Prep.
The volatility right now is really incredible.
Wow, look at that consolidation on the upper right chart.
You know what we've seen this earnings season? Some of these expected moves get even more violent. This is why I have switched my strategy 10 years ago. And if you're chasing, you're in trouble.
Okay, let's take a look. A little pullback yesterday, right back up today. 11 and a quarter handles, 67, 26 evens where we're trading. The buck on the rebound here, up 48 cents at 97.38. TLT trying to catch a bid, up 9 cents, 89.41. USO in that trading range, moving back up towards the top, up 62 cents at 75.67. GLD and silver SLV both in the green here. SLV over $40 for the first time in who knows how long. Bitcoin futures, they're up about $1,300 at $113,000. Let's bring in Triple D here on this Wednesday. And lack of earnings to talk about, but we can certainly talk about AI.
Well, not even lack of earnings. We had a big AI company report there last night, and we didn't know where we were going to squeeze it in. So heck, you mentioned it. We might as well squeeze it in right at the start here, Micron. So lots of stocks to talk about. We're going to get to Baba and NVIDIA and Oracle and all the other fun news last night. And the euphoria around AI, we're thanking this morning for our title Jefferies, who is saying euphoria is greater than fundamentals in their downgrade of BE, which we'll get to in a second here. So I like the title, Jefferies. Thank you very much. Micron reports last night. 303 versus 286, 11.31 billion versus 11.22 billion. That's a beat on the top. That's a beat on the bottom. The guidance was excellent. They see Q1 360 to 390 versus 304. They see sales way up to 12.2 to 12.8 versus 11.93. The stock is not climbing simply because the bar was too high. But this is not, a disappointing earnings report. Maybe the reactions is slightly disappointing, but the stock had run up basically 30% the last 3 weeks ahead of the report. So that's why bar is simply too high. With that being said, it would not surprise me if we do find buy the dippers emerge here and the stock makes new all-time highs sooner than later.
It wasn't treated well after its last earnings report, kind of similar, and it sold off and it gave you one heck of a buying opportunity. Not sure in this market environment if you're going to get that same kind of pullback, but it had a spike over 174. That's way over the all-time high, and had a spike down to just over 163. But on days like this, with earnings, I like to look at the mark. I like to look at 166.41. Let the street decide if good or bad report just based on that close. Yesterday's high is coincide really nicely with the all-time high. So let's see if we can catch a bid. The next daily low to keep an eye on is down at 161.59. So just kind of settling in here at the 164 area.
I mean, lots of other stocks to think about with sympathy moves, but when your leader is only moving 1%, the sympathy moves are going to be muted here. Western Digi, WDC is one that always moves with this. So if Micron has a move in one way or another, keep an eye on WDC. That can move with Micron. Let's go to the big story overseas here first, because you got Alibaba here once again ripping. It consolidates for 3 days. And then another headline. And this is what we talk about, over on Stock Trader Network and even on PreMarket Prep here, is headline anticipation. I mean, we are in a cycle where there just seems to be positive headline after positive headline after positive headline coming out of China stocks lately. And this was not the case for years. For years, it was like, they're getting harpooned by the government. There's stuff happening, that isn't helpful. There is, misinformation happening over here. It's not been the case this year. China rally actually feels like it's for real this time. And I mean, when you look at a stock like Alibaba, starts the year at around $100, and now we're looking at the stock at $177, and you're like, holy cow, were we all sleeping on this? Definitely not. There's been people calling for this Alibaba rally for years. It's just been the fact that China has been the hated and the worst place to be. But I think, with everything happening in the political landscape here and tariffs and everything, what we have seen happen is international dollars are going to other places here now. US has always been the best place to be. I hope US continues to be the best place to be. But there are other places to invest in AI now. And China, so US number one, not saying not number one, US number one. But I think China is trying to become a strong number two here. And it is obvious. And I think if you're an international investor, you got to start saying, hey, we're loaded up in all these US stocks trading 40, 50, 100 times earnings. And then we have these China stocks that at the beginning of the year were trading 8, 9, 10 times earnings. These are huge value stocks and have been value traps for years. Are they finally getting the multiple expansion that they deserve? I think the answer is yes. And I think if you've been investing in China this year, you're having a great year.
A great year. It just got tacked on. You mentioned the consolidation. I think when we talked about this before and then wanted, it started to move, we were looking at these big up moves. In the short term, when you look at the daily, you're thinking, wow, this is so overdone. Like this under 110 here, this move, 150, 160, it's overdone. But you go a longer term perspective on this, and the party could just be getting going here. I did put in the 50% retracement. We were over $300. The government came in, boom, hit it hard with with regulations, with Jack Ma, took it down to 57.29 or $58. So even halfway back of the move, even just a retracement to 187.50, we talked about that before.
Yeah, when you look at that line you just drew, what is that, around 187.50?
Yeah.
I mean, maybe that's where you start thinking, and that's $10 away here. So, I mean, you are chasing at this point in time, but the chase has been working on certain stocks. And again, if we get into this multiple expansion and Alibaba is putting themselves on the map for real, I think, one thing I did, by, talking about China stocks, I failed to mention the news. They're looking at spending another $50 billion on AI. I mean, they are coming in here and they want to be a major player in AI, and they've got a lot of money and they've got some power here too. So, I mean, it's hard to bet against them. This was one I was in for a very, very long time. And then, I'd sold it like 135 and then went down to 105. And this is the problem with long-term investing. We're trading it. You don't rebuy. Well, I ended up actually rebuying it perfect because it had the breakout from back in just late August. It went, on the news, went from 117 up to 139. And then I'm like, you know what? I've got to get back in this thing. And I ended up buying at 130.50. The low that day was 130.06. I bought that live in the STN room there, and I'm still holding it here. And I'm so glad I'm in it because, I just picked up 47 points here. But I'm looking at this thing and just thinking, here's Alibaba. And you could say, oh, well, it's been a big move to your point, Joel, and maybe this is the time to ring the register. And usually these China names eventually cave. But the question is it different this time? When you look at a valuation perspective, Alibaba's trading 18 times earnings. It's 2 times sales. I mean, there's no tech company that that's growing at the rate that Alibaba is in the US, trading at 18 times earnings and 2 times sales. It just doesn't exist. So this is where you can get some value still. And if China rally is for real, if we don't have the geopolitical risk, geopolitical risk is always real over there. We don't know. It could be wars, could be anything coming. But, at this moment in time, these stocks are cheap. I mean, Baidu is trading 11 times earnings. It just ran up 40%. It's still only 11 times earnings. I mean, if these things want to start going, they could really keep going. They have valuation support to them.
Ditto. I mean, Catalyst, right? Story, Catalyst, and they keep coming back with this AI buzzword. I mean, if you look over the last couple months, I mean, it's been a slow progression, and now they've put the money in, and boom, you're getting the reaction. I'll just do real quick. Baba, it's a little bit easier to look at this technically because you had the check back from 141 to 125, right? So that was a 16-point drop. Half of that takes you back to the 133 area. That's above yesterday's high. So if you're looking for a retracement, you thought 140 was overdone. See how it reacts on that for Baba. We're at no man's land. You just hit a high in the pre-market at 179.55, psychological 180 number. Really nothing on the monthly, so just have to use your momentum. Usually, I'd say, and not everything's perfect. When Baba is opened up or down this much, there always is some kind of counter move. So maybe you can, not recommending shorting it perhaps, but if this is a target area that you had at 178, see how it reacts today. But been strong, and one characteristic of this market, the strong get stronger and the weak get weaker. And
well, I don't even know if that's a characteristic anymore because the weak are starting to get stronger here too. The market rally is starting to broaden out here, so we've got to consider all those factors when we're looking here at this market right now. Oracle has been all over the place, and let's just go to this because this news was also broke. We broke this, Brentster broke this in the STN room there just around 5 o'clock. OpenAI expands its Stargate AI project with Oracle with 5 states. And Oracle went in like a heartbeat from 314 to 321, just like that. Bang. You can see that little line. You see right there?
Yep.
Boom.
Yep.
We might have to go back to the white. I kind of agree. You know, we went white, black, but it's harder to see those pricing points on the black. Yeah. I think we might have to go back, and again, you guys can vote on it again. We had a lot of people that like the black. We're kind of doing the black-white theme here right now, but I kind of agree with it. That I'm looking at your charts, I'm having trouble reading the prices. Yeah, like I can't grab where that is. So we may have to actually go back.
Okay, but it got nearly to 3.
Tommy Lackey says white charts. Nobody knows technicals better than Tommy Lackey. That might be our vote right there. Tommy, we love you, buddy. He comes in the STN room all the time. We love Tommy. I'm thinking white too. So I think we're gonna go back. We might finish the show black. We'll make Joel do it on the fly. But yeah. So anyways, that was a little tangent here. Spiked up. It's funny. Oracle's like spiking and then dropping and spiking and dropping. It's all of a sudden like a trading stock here. It can't find its way. I'm long some Oracle. I bought some of the longer term account at $300 because I feel like the long term story is intact here. I feel like if they come anywhere to those growth rates, I'm going to be happy that I have this in 3 or 4 years. I also had it in my account for 20 years. And I don't want to be out of it for the big 20 when AI is taking over. With that being said, I don't really like the response to some of these headlines. We had big pops and then it drops. We had a good pop last night. Can't hold the gains. From a trading perspective, maybe we're going to retest 300 again here.
It's messy.
Maybe that's the word. Maybe it's hard to make a prediction. It's just sloppy and messy and kind of all over the place. And maybe there's just better stocks to trade right now, like more predictable moves, because this one's been pretty unpredictable.
It's found a buyers under 300, and the spike yesterday took it up to yesterday's high is 325. So you didn't get back into get to that in the pre-market. So I was going to say it's kind of making lower highs and higher lows. I mean, because it gets the spikes. I think I figured the 50% of this whole move was like 318. So I think if we could get above 318 and get a bid, a strong bid, then maybe go out and take out the high of the move. On the downside, it seems like every time this thing comes under 300, since you've had that gap's been protected 5-6 times. So wait for some consolidation, maybe longer than 2 or 3 days, and see if you can bust out here. I mean, the expectations that they put on that stock are huge, but they're 5 years away, right, for 2030. But, patient investors get rewarded. Price action right now is the bulls are not giving in, and the bears are really not making much of a stand here.
Brentster really helped us in the STN room there last night because on this news, he's like, watch those data center infrastructure plays. He said it right away. Watch those data infrastructure plays. CoreWeave started popping. And then there's 3 of them there, Brent. There's CoreWeave, and then there's CIFR.
CIFR.
CIFR. and then Iron, and CIFR started popping, and then Iron gave us the opportunity, and a lot of people made some money in Iron yesterday because the stock was not moving. There was an iceberg seller at 41.80, 41.85, 41.88 that decided they were not going to move, and people were just buying, and like we were buying it too. Eventually that did move, and now the stock's up at 43.36. So it was a good opportunity last night for that lag. And this is what we talk about. You know, this is what we talk about here. We talk about this on Stock Trader Network. We talk about this everywhere. It's sometimes the money isn't made trading the leader. It's made trading those pure plays and understanding what can move off the news, because the algos grab the headline, but a lot of times they don't grab, you know, those other plays there. And the data center infrastructure plays, which you were all over there, Brentster, last night, gave us a little entry there. It was slow and allowed us to make some money.
Well, we know that these names have been probably the first sensitive when we've got information like AI related data center information on Oracle. And it's important to note that in literally the second sentence of the release that OpenAI gave to disclose this information, CoreWeave was mentioned. It says the combined capacity from these 5 new sites in Texas and ongoing projects with CoreWeave brings Stargate's capacity to nearly 7 gigawatts. So right when I read CoreWeave in the second literally the second sentence, I thought about them, thought about the IRN. There's another one too, Wi-Fi, white fiber. This is a recent issue. That's WYFI.
Yeah.
We have our watch list in STN room. And when a news item happens, we like pop up the watch list really quickly. That was one that we had a watch list ready. I think the next news item we get to here in just a sec, we didn't really have like our watch list ready, and we were kind of like having to generate it on the fly. It definitely slowed us down a little bit. I do want to mention here, while we brought up CoreWeave, I want to just do like a little bit of a correction from yesterday. We were talking about the CoreWeave IPO lockup expiring today, and that is the case, but the majority, like 80% of the shareholders that were related to the IPO, would have had their lockup expire the day after the last earnings report. There is going to be a small portion of shares that come available the 180 days after. That's today. That is related to the OpenAI investment on CoreWeave. So just a little heads up there. Felt like I had to get that in.
So it may not be as big of an event as maybe some people think it's gonna be. This long.
The OpenAI investment in CoreWeave was like $350 or $300 million. So it's like it's gonna be like under like 5 or 10% of the potential possible shares that could go up for sale today.
Okay, that's awesome information here, Brentster. Keep an eye, you know, so we did get these pops, but Oracle has given it back and went red here now. So I don't think that's great for CoreWeave. I don't think that's great for IREN. So as much as we were trading this last night, you could trade it the opposite way right now. Maybe the IREN, I know there was some upgrades here today too. So you just got to watch your ratings parade here a little bit too. Well, not an upgrade, but Arete started IREN on a buy. So there is some ratings and analyst commentary here. But keep that in mind. As Oracle leaks, these stocks here could start to leak here as well. CoreWeave and IREN still trading higher here. So I kind of, if I was in these things, I think I'd ring the register here, at least from a trading perspective.
All-time high was made in IREN yesterday, 44.25. But it's not the all-time closing high. That was made the previous day at 41.90. And here yesterday, you got to close at 41.72. So a double close up there to me had major significance. Let's close. Keep improving on those closes on those all-time highs. So there's your setup. Big move in the month of September for IREN. Hasn't quite doubled yet, but then again, the month isn't over.
I just initiated a short in IREN from a trading perspective. We'll see how it works. Shorts are tough right now, though, folks. Shorts have been really tough. You short stocks, and you're like, why are they short? Nothing works on the short side. So we'll see. Oracle rolling over. I kind of like that for catalyst on the short side in IREN. Okay. Moving on to other things. LAC, you were with us, Brentster, on this last night, too. This stock went nuts. So I want to keep you here because you've got a good feel on the news on this as well. Looks like the U.S. government is going to maybe be taking a 10% stake in LAC. And the stock just blasted. The algos just went absolutely berserk. We started grabbing lithium stocks, you know, in the STN room. And we're like, is it going to lift the whole sector? I know we had a few people grabbing Albemarle, which is one of the bigger players, SQM, which is a money Mitch pick, started moving up there. You know, and then we were looking at smaller players like LITM. But give us that news on the LAC because this thing's up 66%. And everybody is talking about this thing this morning.
Yeah, sure. So as far as we saw, you hit the news pretty well when you just mentioned it a minute ago. The report, as far as we could detect, was from Reuters last night. Got all the stocks going crazy, even bled over into some of the rare earth names a little bit. Interestingly, Lithium Americas was out with a press release very early this morning. Not very early, but 7 a.m. The press release was titled Lithium Americas Comments on Share Price Movement. They are responding to media reports pertaining to the status of the company's previously announced $2 billion loan from the U.S. Department of Energy. Company is in discussions with Department of Energy and GM related to their Thacker Pass lithium project. That's kind of it. It says the company continues to work with the Department of Energy and GM regarding proposals for a mutually agreeable resolution. I thought it was interesting that they positioned this as like a response to media reports versus just mentioning, like addressing the media reports directly. You would think maybe they would come out and say, like, yes, we've talked with the Trump administration or something like that. They were kind of like leaning on the media reports here. So I'm a little skeptical, like not skeptical, but I guess I'm a little more cautious on this news item than I was last night.
Yeah. And
Kind of weird,
again,
right, Dennis?
it is. And chasing stocks up 50, 60, 80%. Like we talked about this too. Like some go up 100, some go up more, but a lot of them leaking back here too. It's been a stock has been a perennial underperformer. It's been a really bad long-term investment. I know we were in this for a while here, Joel. We were getting our butts kicked here. It was great in 2020 and 2021. It was a huge winner for me. But then we re-entered at like $20 and got some heat on this. I mean, there is just bag holder central all over the place in LAC. So this isn't like, an MP Materials that's blue skies ahead, making new all-time highs. You have a stock that is in bag holder central, where everyone that has been in this stock is pretty much down money, except for the people who bought it maybe in the last year. So I think that makes it a little tougher for the stock to just continue to like go up, 80, 100, 500%. It's tough to go because there's so many natural sellers like, oh, if it gets back to 6, please give me my money back. Oh, if it gets back to 7, please give me my money back. So that's why I think chasing this one is a lot tougher than like, let's say, an MP Materials.
Spike over $6, and then you've pulled back to 610. Now trading comfortably above $5. Not going to look at the gap, but gap's way down at 330, 323. I mean, that would be cutting the stock in half. I take Brent, what Brent said here. It was not like a confirmation of saying, yeah we're, so that makes me a little bit more cautious on it. On the other hand, when the government starts talking about stakes in companies and things get going, using Intel as an example, sometimes those things come to fruition too. So, nice move. Like to see it get back up to the pre-market high, and to find support in this thing, I think you have to drill down on your shorter term charts. Right now, you found buyers above 450. Big spike in volume yesterday. Probably will continue today. But let's take a look at some of the other ones, as Dennis mentioned. Looking for sympathy.
Two biggest
moves.
players are ALB and SQM. SQM, obviously, an international play here, and then ALB is your biggest domestic player, Albemarle, which lithium stocks have just been crushed. And, there's no, like from where they were in 2021, it's the price of lithium. I mean, it's just come down substantially here. So we know, like in 2020, 2021, everybody thought there was only going to be EVs out there 5 years.
Correct.
That has not occurred. That did not occur even in the slightest bit. It's way less than anybody thought. So, you have a few hybrids, you got a few EVs, you obviously have Tesla still a major player. But besides that, you actually have the big three backing off, on pure EV production. They went more hybrid. So the need for lithium is just so much less than what the projections were in 2020 and 2021. Like if you look at ALB, this stock in 2022 had $334. The whole reason was lithium was just priced a lot higher, and there's a commodity-based stocks. They're trading off the price of lithium. So lithium coming back in. Obviously, if lithium starts to go up, if this starts to get, and we start to see, some future need here, which I think there will be big future need. I think, even from a humanoid perspective, I think some of these are going to run on lithium batteries. Now, there could be other things running them as well, but the need for lithium probably in the future is quite high. The question is there, a long-term, prospects in buying SQM and ALB here right now? I kind of think the answer is yes. So I think I actually would be buyers at dips on these stocks. I know Money Mitch likes SQM.
Yeah, looking at alternatives, for energy. I mean, in the EVs, was the the original catalyst that we had in 2022. Like, just couldn't get enough lithium, and that didn't turn out to be the case. But now, we've seen what some of these other energy companies have done off the AI. So is it a false start here, or more, more to come here in the lithium story? But I think it has to expand outside, the use for lithium outside the EV market. And I think that's what if you're trying to invest in this for the long term, that has to be used. Seems to be plenty of supply in the lithium market and a lot of overhead supply, but in these stocks. But on the move today, LAC, that's your leader in the lithium stocks this morning.
So we had lithium, we had rare earth magnets and minerals with MP, we got chips with Intel. That's at least 3 spaces that we've heard about some kind of involvement with the US government. Are we to the point, guys, where we start going around and like speculating on what a next space for this kind of thought might be?
I think so. Am I diversified? So he's got a little bit of lithium. We're trying to figure out where he's going to go next here. No, it would be really hard, like finding a needle in a haystack, but we just got to be aware. It's not going to stop with MP, Intel, and LAC. There's going to be a lot more investments here. And now that, he's obviously we saw a tweet last week about looking at Intel price at 30, he's thinking, man, I could do this trading for the U.S. government and make the U.S. government all kinds of money here and buy these companies at discounts. I do like what MP said. The CEO came on CNBC this morning, MP, and was comparing them. They were saying, do you see, how do you see your investment compared to, LAC and Intel? Because obviously the government's taking stakes in all of these companies here now. MP was tooting his own horn, but he's like, I kind of see the Intel and the LAC more as bailouts. And ours was more, a different type of that. Now, you know what? He's got a point. Intel's been in the doghouse trying to find its way. LAC's been in the doghouse and trying to find its way. So are they going to be going the bailout way here where they're helping companies? Or are they going to be starting to now look at strategic investments, say, we'd like to buy it. He does want to buy some NVIDIA. He's been saying that, at a discount and trying to find different ways to do it. I think the U.S. government, though, is going to continue to take stakes in public companies.
Yeah, we just got to figure out which ones they are.
Really hard to figure it out.
There's a lot of different companies there that they can go to. Just real quick, did we get any reverse news here on Oracle? As it is just giving back all those gains and now is trading.
That's why I just went short the IREN, and I was considering even shorting CoreWeave here for that reason, because I think Oracle is your leader here. With Oracle rolling over some of these other ones, I'd also be very cautious with CIFR. That's trading up. I know there's some ratings here which are bringing them up, and sometimes it takes, regular session for those selling pressure to come in. But I think if you're coming in here and chasing these stocks up right now, I think Oracle is telling you don't chase these other names just as much as we were chasing these names because Oracle was trading higher last night. Brentster, the trade is kind of reversed here.
It kind of feels that way. And the chat is saying that there's a bond sale by Oracle. I'm looking around right now, trying to confirm that. Okay. Let me dig a little more.
Brentster's going to go dig in the background here. We'll try to get a reason for this Oracle. I am also seeing Bloomberg. Oracle seeks a $15 billion bond market with rare 40-year offering. So they're aiming to raise $15 billion from a corporate bond sale here. And that is what Bloomberg is reporting here. So we don't have any color on this yet, but this is what traders are citing for the Oracle weakness here. Although we did have a forum. You could go read the forum. Actually, we do. We have a forum that was filed at 7:57 this morning. SEC forum F24B2. Brentster, if you want to dig into that here in the background, it's a beefy one, but I see the same thing. It's talking about floating rate notes, whole pile of them all the way up to 2065, which is a really long ways out. Usually they don't slam them on bond offerings, though, unless there's a convertible attachment to it.
That's what I was going to say.
Maybe dig in and make sure there's no convert on any of those. The one stock we did not talk about here today, not on our radar, is FCX. And that stock is getting crushed here this morning. The chat's talking about it here as well. It's the mine. So this Indonesian mine accident that's happened here, they've now found 2 dead workers, and there's still 5 people missing. So they've confirmed 2 dead people here now. And that's the update that came at 8 a.m. And they're hitting the stock here, obviously, on that accident that's happened here. So if you're trading FCX and you're wondering what the hell's going on, it's the accident there, the update on it from 8 a.m. this morning.
Just price action is indicated a knee-jerk reaction here, slamming the stock after consolidation area through the $42 level. Hard to look at this technically when, something, a tragic thing happens like this, but I'll just alert our traders, investors that there was a lot of interest in this in the lower 41s. One daily, I'd say 5 lows surrounding the $41 area, currently trading 41.71. So keep an eye on that. And in order for it to recover, it's going to take at least a day or two. Right now, you can look at that low from yesterday at 45.14. I'm sure a lot of people would like to see the bottom of yesterday's range here in FCX.
Our guest's ready here in the background, so we're going to have Brett run that intro. We're going to get to the guests. It's early guest week. This is like 3 for 3 so far this week. The guests are early. We like early guests.
Good morning. Sahak Manuelian from Wedbush Securities, covering the global markets for us. Sahak, how you doing on this Wednesday morning?
I'm well, thank you. Thank you, Joel, for having me on today.
All right. Well, a lot of news out there. We're talking a lot of AI, but one thing we really like to focus on this show is the rotation in the market, the wicked rotation in equities. Sometimes it lasts a day or 2, 3 days, 4 days, 5 days, and sometimes it just flips right around. But give us some of your observations on the current rotation for large investors.
Yeah, I think we saw a fair amount of this yesterday, actually, Joel. Not just yesterday, but maybe over the past month or so, we've seen, I think, an increase in some of the rotational forces under the surface. Yesterday, tech and consumer discretionary were lower, and I think pretty much a source of funds for investors that started to move into more of the defensive names and some of those mid-cycle sectors such as REITs or energy. And energy was a huge outperformer yesterday. But anyways, so we've seen some of that going on here. Outside of that, we've also seen the rotation coming out of some of the large caps and seeing small caps really catch a bid over the last 4 or 5 weeks. And we've seen some relative outperformance from the small caps over their large cap peers. And these things are really starting to show some signs of life, as I think we've had a pretty decent macro backdrop. We've got interest rates going in the right direction, lower, and no recessionary talks. And so small caps certainly benefiting on the heels of just, I think, better interest rates, the macro backdrop, and then not to mention valuations have gotten, I think, extremely compelling considering some of the moves large caps have had over the last couple of years.
Let's move to, talk to some sectors that may be getting some attention here with lower rates on the horizon. I know Mr. Powell may have upset things a little bit yesterday talking farther out, but something that's really directly affected where people are looking for yield. They're looking at REITs. They're looking at utilities. Healthcare, not much, but there is some dividend in those stocks. Talk about what you're looking at, maybe some individual REITs, or we could just look at the XLU here. Where is the money going there for safety, and is that a bad thing?
Yeah. So first, I guess, Joel, what I would say is the first part of what you said with Jay Powell and his comments yesterday. On the back of that, we actually had Fed Governor Bowman with some quite dovish remarks yesterday morning, and so we'll see what happens here. I think most important is that we did get that 25 basis point cut. Markets, Fed funds futures, I should say, really pricing in about another 45 to 50 bips of cuts this year. So we've got 2 more meetings. Presumably, we get another 25 and another 25 on the heels of that, and we'll see where that settles out. But fixed income, or treasuries, I should say, have caught a bit over the last week or so, or 2 weeks really. Yields have been coming down, and so more sector rotation. And speaking of some of these sectors you highlighted, I think certainly energy, utilities, healthcare, and REITs all look pretty decent here. The setup in healthcare, I think, looks very favorable, while we've seen some of the pharma names kind of pharma and med devices really kind of flatten out a little bit. But you've seen a lot of rotation into some of the mid cap or mid cap biotech names, which have really been left for dead. Valuations, again, pretty compelling, some beaten up names there. And we've seen some pretty decent M&A that's really starting to revive mid cap biotech. So I think healthcare looks pretty interesting. Within the utilities, acting much as defensive as growth with all of the AI play within utilities. So utilities have been a pretty decent place. I think utilities continue to work. And then I think that some of these REITs, we saw some decent performance, relative outperformance yesterday. I think the setup into year end or the next quarter really is pretty decent for the REITs as well, as a proxy for fixed income instruments. And then what else? I think these financials still look pretty decent here with the macro backdrop. So I think really from now into year end, we just see maybe a little more rotation out of the real big year to date winners being tech, consumer discretionary, and communication services. And I think that investors really seeking alpha in some of these other laggard sectors.
Sahak, maybe, and I think you may be even insinuating with some of your commentary here, is a lot of investors have probably just been staying away from these sectors because they've been doing nothing, and the fear of missing out on tech, and they've been like just chasing all these tech moves, and we've seen these valuations just go nuts on some of these tech names. You have certain companies, even like Oklo, that are pre-revenue and don't even have revenue here, but they continue to go up here every day. If some of this froth starts to come out and the market actually does start to get defensive, because I don't think you're seeing that yet. I think you're starting to see some of these other names pick up because interest rates are starting to project, or interest rates are actually starting to go down. But if some of the froth comes out of some of these tech names, couldn't these other sectors benefit even more as investors maybe start saying, hey, there's other places to be here? So, I mean, these, like Pierre said, these have really been laggard sectors here. But I feel like there's so much money that is just in tech right now. Even a little bit of rotation over here, some of these other sectors would really feel that.
I really agree with everything you just said. And really, you can take a look at Micron and the earnings results from Micron last night. These guys put up an amazing print, very, very solid guide. Stocks trading down a little bit. There's so much expectation built up into these names. And then if you look at some of these other tech names, Microsoft, pardon me, not Microsoft, I meant to say Oracle. Oracle is now trading at a higher multiple than NVIDIA. NVIDIA and Microsoft are and for the time being, the biggest beneficiaries of this AI trade, but Oracle now trading at a higher PE than both of those. I think there's a lot of froth in tech, and it's not just, I think, just valuations have gotten pretty stretched. And so when one thinks about where they can start to go out and make some alpha, it's probably going to be less in some of these tech names that have had incredible runs. And I think folks will be forced to look at other sectors within the economy. And given the macro backdrop that we've got, I think guys are getting much more comfortable looking at other sectors. And I think the one other area which, I smile a little bit, but, small caps, I can't keep highlighting these small caps. They've been so, underappreciated, unloved, or hated, however you want to look at it. But, the Russell 2000, I think it was a week and a half ago, we had this monster move to 2350. And since then, we've been kind of grinding higher. I think that this can really, from now to year end, really catch folks off sides and really make a move and outperform some of the larger caps. So I really like small caps. And then yesterday, under the surface again, this S&P equal weight outpacing
Yeah.
outpacing the market cap index, again, just showing more of the rotational forces that we've been talking about. But I really like these small caps here, and we've been talking about it for the past 18 months. And we get a little bit excited, they rally for about a week or two, and then it's right back to the old playbook. I think that's changing a little bit. We've had a nice 5 weeks of relative outperformance within the small caps, and I just think that can continue.
Going back to the healthcare, now, one thing we were talking about earlier in the show is, once the government gets behind you, the MP materials, we all know, growth story, the government investment, you go to the Intel, right? Intel trying to revive a broken company, at least from a price perspective, and now you have them looking at lithium here. On the other hand, the administration has not been favorable to these companies. So do you look at that, moving forward? Do you look at it as, wow, if they've had the negative catalyst here and have shown, signs of life, and maybe this is something will blow over? Because it's certainly, we know, fighting the trend of the government and the investments. I don't know if we're going to be getting any government investing in any of these healthcare stocks. So talk about overcoming that obstacle.
What I would say to that, Joel, is, looking at healthcare over history, I don't know if any administration is really favorable of healthcare and in one way or another not looking to disrupt how healthcare works in this country. Having said that, with this administration particularly, it's been so much more bark than bite. Whether we look at Trump and MFN, or most favored nations, looking at pharma, looking at disrupting any of the PBMs, et cetera, there just hasn't been a lot of follow through to any of this stuff. Having said that, what has certainly occurred is just these companies naturally looking at large cap pharma coming out of COVID. They had these huge runs because of COVID, and then that went to the back burner. COVID, for the most part, over and in the rear view at this point. And then these GLP-1 drugs or the obesity drugs, that's been really all the rage over the last maybe 12 months or so, and really more recently, that's coming on the downdraft as competition amongst various players and many more small cap biotech and therapeutic companies start to get into the space, and these guys try to figure out whether or not these will be one and dones, or folks will actually stay on these or use them for 3 months and 6 months and then get off of them, et cetera. What I will say about healthcare and where I think we stand in healthcare today, managed care and some of these facilities names, I think, have gotten so beaten up, and really about risk reward. We've seen managed care really throw in the kitchen sink. Some of these things starting to move higher. UNH is a good example of that. Warren Buffett, or I should say Berkshire, really came out and said they took a stake, and UNH has kind of been grinding higher since then. But some of these other managed care names, as a Q2 earnings, kind of just threw everything out there, and these things seemingly have made some kind of a bottom. So we've had some really decent upside in some of the managed care names. And then the other area I touched on briefly earlier is really this mid-cap biotech and therapeutics complex, which has really been left for dead over the last 2.5 years. But more recently, with the macro backdrop, the economy looking on pretty decent footing here, interest rates going in the right direction, and seeing some M&A deals, and not to mention several collaboration deals with large pharma or large bio this year, and just the really beaten up valuations within small and mid cap biotech, and some of these actually going back and giving investors back their money and folding up shop, which has been this cleansing process, if you will, has really brought a lot of eyeballs back to small and mid cap biotech. And you've seen the XBI make a move of 7 or 8% just over the past month. And that's where we're at today, year to date as well, right around there, up 7 or 8%. So I think within healthcare, biotech is probably, certainly in my opinion, the most attractive area or subsector within the complex.
Before I let you go, we're talking a lot about U.S. equities here, but we have things moving, emerging markets moving, China on the move, Baba on the move today here, and in the weak dollar, whatever circumstances, tariffs or whatever, these overseas markets are heating up. Is that maybe some of the money coming out of tech? You think it's perhaps going into China and these overseas markets?
Yeah, certainly there's been a lot of rotation recently out of some of our markets, and I think that money really flowing into other areas that have not performed quite as well as our markets have been just phenomenal this year. I think we could see more of that. I think some of the foreign policy concerns, issues, etc., will play into that some more. I think Trump yesterday at the UN, addressing the UN and talking about Russia, Ukraine, etc., and possibly throwing sanctions at Russia, really moving oil and the energy complex. Energy had been a laggard. We're seeing that start to move higher. I think that can continue. And then you mentioned Alibaba this morning. I think whether it's the KWEB or looking at some of the other ETFs that really focus on emerging markets or EEM or China specifically, I think these can also play more of a catch-up role and start to really garner more U.S. investor mindshare.
Sahak Manuelian, Managing Director, Global Healthcare Equity and Sales Trading at Wedbush Securities, joining us on Pre-Market Prep. Sahak, always great to get your perspectives on the market. We'll be dialing you up before the end of the year.
Thank you again.
Thank you.
I'm going to jump on here, folks, put our Hive banner up and read our wonderful little sponsorship here from Hive Digital Technologies, which did have a little news. Maybe we'll touch on that here real quick. Hive is the sponsor of this show, a global leader in green power data centers for Bitcoin mining, high performance computing, and AI, operating with nearly 0.5 gigawatt of renewable energy. Hive is on track to capture 3% of the world's Bitcoin production by the end of this year. In the bottom right corner, there is a QR code. Scan it on screen or visit the link in the description of this YouTube video to learn more about Hive. Thanks again, Hive, for sponsoring Pre-Market Prep.
Yeah, stock actually had a press release last night. Hive reaches 2% of global Bitcoin network, mining 9 Bitcoin a day, surpassing 20 EH per second. So just adding that to Hive blockchain. Thanks again to Frank Holmes. We'll be getting our crypto segment coming up here. When's crypto segment?
It will be Tuesday, September 30th, with Louis Sykes from All Star Charts joining us from New Zealand.
Awesome. So we'll look forward to that. We're doing this crypto stuff. Okay. So we have a lot of other ratings, which are really interesting. So the title of our show here today was Euphoria Greater Than Fundamentals. And we did not make this up. We actually took this from Jefferies. Jefferies downgrades Bloom Energy to underperform, calling Euphoria over fundamentals. So I just think it was such a good title. Props to the marketing team over there at Jefferies that came up with this one. I just think we are in this market on so many stocks right now where you've got companies that are pre-revenue. You've got companies that are just going up relentlessly. Oklo just goes up every day, no matter what. Doesn't matter that it's pre-revenue. I mean, I just don't even get it at this point in time. But, technicals, obviously when the story's hot, fundamentals don't matter at all. Some of these companies will have fundamentals eventually, but there's not that much behind them. So analyst commentary on Bloom Energy and why they're downgrading it here. We got Jefferies analyst downgrading Bloom Energy from hold to underperform with a price target of $31. Analyst says, BE is indeed a leader in a promising niche with many bullish assumptions facing practical constraints. Given the limited visibility into post-2026 growth and some early signs of over-exuberance, must be taking that from Alan Greenspan, we find that risks to the downside outweigh further upside at current levels. Downgrade to underperform on rich valuation, need to see significantly incremental company-specific data points to justify current levels. BE is getting crushed on this rating here this morning. It is down 9% here in the pre-market. Kind of momentum broke a little bit yesterday. And
Very.
what I would say, so it's a well-timed downgrade. And what I will say here is this isn't just a Bloom Energy thing, folks. This is all these stocks. You wonder if this couldn't be a little bit of a turning point for some of these names like the Oclos. If I was an Oclo, maybe it's time to think about ringing the register here when you see BE lose basically 15% in 24 hours. Kind of Oclo could do the same, folks. So just be careful if you're long in the tooth on some of these names. They may go higher here still, but I think a catalyst like this, it has the potential to bring down the whole sector.
Very interesting day yesterday. A drop from its all-time high, 86.27, all the way to 77.38. Boy, oh boy. I don't think I'd want to stand in Jeffrey's way here. I'm looking at one daily low at $69.94, $70 from a couple days ago. But just the way it had, it spent 4 days in the 60 handle. So I can't even give you, a lot of confidence in that $70 level. A little bit of a gap fill under that. If the bulls want to protect this stock, 60 down at 68.55 would fill the gap there. Coming back on the upside. Maybe you get to the bottom. You'd need one heck of a turnaround to get back at yesterday's range, the lower end, 75.60. Jeffrey's a pretty influential company on Wall Street. So if you're just trying to fade them off this, I'm buying the open. I have to buy the open. This is ridiculous. It dropped 12 or $16 from yesterday. I would look for immediate gratification on that because momentum is certainly to the downside and only one daily low to lean on.
Amazon also with a huge upgrade here from Wells Fargo this morning. Thanks to Street Insider for the note. Wells Fargo analyst Ken Gorelski upgraded Amazon from equal weight to overweight with a price target of $280. They're upgrading Amazon to overweight on greater conviction in AWS acceleration into 2026, raising AWS growth to 22% from consensus estimates of 19%. We see Project Rainer, a significant compute capacity build with partner Anthropic as a primary driver of acceleration. Then the notes is huge, so I can't keep going into it. I'll be reading forever, and my throat still hurts from the COVID I got over the weekend.
Oh, you haven't got rid of that yet?
Well, I got rid of a lot of it, but I'm functional and not on Advil anymore. But I'm supposed to take.
What about Tyler? No, just joking.
Yeah, don't take any pain meds, heaven forbid.
220. Got the bounce off it yesterday. What I will say is that this has had a nice pullback, a $20. Is that one? We'll see what the all-time. Oh, that's not quite a $20 pullback, is it? Yeah, it almost got to 240 there. It came back to 220. Halfway back is 230, folks. But I think you're going to need a rip, roll, and rally even to get up to yesterday's high, way up there at 227.86. So I think that also the 50-day is right at that area. Hasn't spent much time below the 50-day since early August. So upgrade, giving it a boost after a bad day yesterday. But I think after a 20-point drop, I think you might see sellers into this upgrade here. But it's trading up 3%. It's the biggest up $3, which is 1.45%. By far your biggest winner of the top S&P components.
Okay, one more rating to cover here. I'm going to go to ServiceNow. I know I was going to go to GM, but I'm skipping GM. Sorry. Motor City. I should do the GM one with UBS with Motor City. Maybe we'll get to it. But ServiceNow is up 29 points here, and we got Morgan Stanley coming out. They are upgrading the stock to buy. See if I can get you a little bit of color in here too. Overweight is what they call it. They're raising their price target to $1,250. Analyst comments, ServiceNow's overall business fundamentals have remained sound despite a more volatile backdrop, delivering subscription revenue growth over 20%, high 20 to 30% operating margins, a lot of bullish stuff in here. That's all I'm reading. There's a lot. It's a big note. So $1,250 price target. Does their case hold water?
It for the short term, yeah. Trading up about $29. I'll just give you the recent high of the move at 965.74. So if this move is continued, got to get back up and hold that area. I'll just be a little cautious here off the open. Buying this up $30. You're opening right into Monday's high at 56.75. It seems to look good on the pre-market chart here, right? Trading at the highs of the pre-market session. But once again, I think this is one of those that, hey, you're right. It's going to 1200. I have to own this thing. I think it would be one stock that I would look for immediate gratification on the open. Don't think you'll get the top of yesterday's range is not that far away, 950.50. If you're looking for a gap fill from the top of yesterday's range in service now.
Okay, we'll do the General Motors. It is the Motor City. We better do
Heck
General
yeah.
Motors. UBS upgrades General Motors to buy. $81 price target. Holy shebangers. That would be really fun from the Motor City here. I mean, stocks going to come back trail. Value stocks are back. Doesn't have much of a dividend anymore because they cut that years ago with only 1%. But man, I mean, chart looks okay here, Joel. Starting to look like it's showing a lot of life. Interest rates coming down. It's got to be good for GM.
The Motor City here, a big spike off this initial rating early this morning, 60.46 at 5 a.m. To me, can this thing open over $60? You know, they haven't been at 60 since the end of last year. Probably, what was the high? Well, you took it out. Did you take it out in the daily session? No, I think there's a big old buyer or big old seller perched at 60. 60 on the nose right now was the recent high of the move. Yesterday, it got to 59.92. So paper stacked up at 60. Let's see a trade at 60.01. Up. You open up there and it turns, a bid, an offer into a bid. I like it. I think just a lot of people buying that paper off the open at 60.01. They're going to want to see 05. They're going to want to see 10. They're going to see, 60.25, and then up in that pre-market high. What happens here is you get the big sellers at 60. You get a little pop. They're like, oh, we got a little bit more to sell at 60. So that's your level there for GM here heading into the open.
All right, 3 minutes here. We covered ratings. We covered a lot of other things here. I do want to do a little bit of earnings preview here for the rest of the week here. We've got KB Homes reporting tonight. We have Stitch Fix reporting tonight. We have Costco, Double B, which is BlackBerry, Accenture, Jabil Circuit, KMX reporting on Thursday. So that is basically the earnings for the rest of the week here. Are there any stocks you want to cover? You want to go to Costco? You still own that?
Yeah, I do, and I hate it. I absolutely hate it.
I know you've been wanting to sell.
I do.
Years.
I hate this stock.
Want you to sell it.
I do.
How do you hate the $1.50 hot dogs and pop combo? There's no way to hate that.
I don't like its valuation. And I know
it's never liked the valuation, but it's traded 45 times earnings since birth, and it just continues to trade there.
And it certainly has not been participating in this rally too. Not at all. I mean, this stock peaked in June at 1060. You're just hanging out at the monthlies. You don't want to hang out near the monthly lows too long. And double bottom for the last 2 months at 933.25, 33.5. That's a big level. I'm sure that's within the expected range. The recent low of the move has been 9.25. If you want to give it a little bit of room, but anything near that 50-day moving average, 957.22. I think you find sellers there. I mean, I know they're expanding in other places and they're opening up and people line up and they go, but they're going to have to do a lot of sales at those places to maintain that lofty valuation.
KB Homes reports tonight. This one is interesting. You do have interest rates coming down, which is traditionally very good for home builders. They're very interest rate sensitive. So that's one good catalyst going forward here. But I don't know. Like, I'm so torn on these home builders. They had big runs. They're way off their lows from where they were in June and July. But some of them have started to leak and come back. Like, you look at a Lennar, it's went from 142 down to 122 and given back a lot of its gains here. KB Homes was just up at $68, coming 62. I can't decide if it's got a high bar or a low bar. I don't know what to say on this KB Home.
No bar.
No bar.
I think it's very important for bulls to do what they did the last couple days, and that's defend the 6150 level with the pair of lows. Also coincided with some lows early in September. You know what this chart's telling me? Just looking at the the price action in September, that well, they factored in the rate cut, maybe one, maybe two, but doesn't look like the market is, at least looking at this home builders chart, they're not so convinced about 26 and moving forward. So always a big factor. KB Homes always is up a lot and down a lot. So this is a good stock to trade. Trade their earnings. You'll get plenty of movement. Make sure you check that expected move for KB Homes. All right, wrapping it up today. Down day yesterday. Man, can you have 2 down days in a row in this market?
Sure.
Well, the pre-market traders are bidding. We're bidding this up. We're up 12 handles, kind of holding kind of steady. I'd say look to your big tech right now. That's leading the way with, of course, with Amazon being up the most. Let's see if we can hold those early gains and move our way back to that all-time high and all-time closing high.
That's going to be a wrap. Come on, join us